As Habila said, this is the 7th edition, and I'm really happy that it's a great number to be celebrating 7 years. And for me, it's also a very good time to be back to this award ceremony. I participated in the first edition as a judge, and to see that it's still going on is quite gratifying, to see that the banks are driving this agenda. So for us as the exchange and the capital markets, I think this collaboration with KBA is something we cherish. We've been doing this for a number of programs. Habil highlighted some of the key ones we did, the Kenya Green Bond Program, being our listed companies. We're happy to see sustainability being part of a key agenda that banks are driving, and because we really underscore that as a core part of what good practice and good business practices are. So as we start, say that I'm delighted to join my colleagues in the financial services sector, as the sector underscores the importance of sustainability as one of the key emerging imperatives for businesses not only in Kenya but around the world. Tamara spoke about the conference that we just had. I couldn't get my ticket to the conference. I think every Kenyan went for it. Kenyans are good at adopting good things, and I think this is one very good sign. So this award is a testament of the industry's growing commitment to the adoption of sustainability banking initiatives in Kenya, and a demonstration of their unwavering support to the greater sustainability agenda. It holds a significant part as it accords an opportunity for the industry to really showcase some of the key developments they're doing and embedding the KBA, SFI, and also the central bank guidelines on adoption of sustainability in their transactions and operations. So the theme for today is catalyzing and promoting sustainable finance in Kenya's banking industry. Now, for the capital markets, we only have one award ceremony like this, and we only have one category. Here we have 8. So we have a lot to learn on what else we can co-opt in our particular award ceremony. But I think it speaks volumes about how banks are now repositioning themselves and also making a contribution to sustainability. I'm delighted to see that there is a very good nexus between sustainability and lending. That banks are now, I think you spoke about 85% of their lending models are sustainable in nature. And this is actually very good practice, because then you're actually dealing with the entire value chain of your customer and also the supply chain downstream. I think for a long time we've been embracing corporate social responsibility and corporate social investment, and we think we're doing good practice. But you're still tainting it if your supply chain is not also doing the same, isn't it? So I think when you're able to embrace this all the way down through the entire value chain, then it actually achieves a lot. So it's my firm belief and conviction that the financial services industry remains well positioned to further these discussions and accelerate the development that does not negatively impact on the ability of future generations to live a fruitful life. I think banks play an increasing role in channeling private investments towards to a climate neutral, climate resilient, and a resource efficient and fair economy. I don't know how many of us planted trees on Monday. Okay, how many did you plant? Great. I think we're all making a small contribution, isn't it? And to see the government put that as a key, as really at the front and center, is something very, very strong, and we need to continue with that. So why ESG, and why is it important? I think as banks pursue profitability, the domestic and international operating environment is drastically changing. Investors are very keen on sustainable business practices that are shaping their decisions and on whether or not to invest in these companies, and even to lend to these companies. I think how you handle ESG and these aspects are becoming key measure parameters before you get any funding. So we're seeing a lot of investors coming to invest in sustainable opportunities, and we see investors also migrating because they want to go into institutions and companies that they think that they are conscious are mitigating risks, especially around climate risk, governance, and even the environment. Now, to put this in better perspective, I think looking at data, say from the Ernst & Young, it does show that 98% of investors are signaling the move towards a more disciplined and rigorous approach in evaluating a company's performance. So they're just not looking at your profitability, but they're also looking at other aspects. of the organization. Similarly, BlackRock, which is a leading fund manager, has been investing in investments that are actually environment friendly and allocate and also challenge climate resilience. So Credit Suisse, the same thing. So it's not just something that's not good to have, but you can actually see capital allocation is following sustainable opportunities. So I think for financial institutions such as yourselves, it's important that for you to continue attracting investors, attracting credit partners, sustainability has to be front and center. I was actually having a chat with one of your colleagues. For me, sustainability should not be relegated to a manager's role or part of a department. Sustainability should actually be at the board level, you know. Sustainable directors, let's have it as a division. Because it embraces a lot. It cuts across the entire institution. You can imagine, I was just telling somebody about some readings that I'm doing. In some countries today, individuals who have households like ourselves and are generating excess energy through solar can actually sell it back to the power company grid through a feed-in tariff and make money, isn't it? How much energy are we saving? You know, how much efficiencies are we embracing by adopting sustainable practices? So I think there's need for us to elevate the role of sustainability, not from a departmental level, but let's make it up at the top level. Now, what's the relevance of sustainability bottom line? Because I think that's important. We all want to invest where we can get returns. So sustainability has some level of returns. First of all, there's a critical question as to whether adopting sustainability has an impact on an organization's profitability in the long run. I want to put a case today that yes, it does. It's highly correlated to the financial performance of a company. And why is this so? A study by Deutsche Bank. Hey, when we talk about foreign banks, I should be talking about KCB and anyway, next year I'll come with some heavy stuff. So Deutsche Bank showed that companies with high ratings in the ESG factors have a low debt to equity ratio. All right? So you can see that, that's one very tangible choice. Now, it helps you reduce your costs on various things. If you're looking at your energy consumption, your bills, your cost on paper and all that you do. Again, there's a cost element savings there. By investing in your supply chain, outsourcing and logistic costs, again, there's a cost savings there. We're looking at even your lending models, you know, you're able to identify and even credit score easier and ensure that you're able to. An institution that is doing sustainable good practice is also a good business. So your level of NPL is lower because they're not just taking the money and putting it in investments that are not, or investing it in areas that are not helpful. So in a nutshell, it actually has a direct correlation to your bottom line in terms of cost savings, in terms of better lending models, in terms of attracting the right kind of clients, and in terms of just ensuring that the entire supply chain that you work with are doing good and saving costs to that regard. So later, I want to on seeing companies adopting sustainability. And that's why in 2016 we gave out the ESG, 2021 we issued the ESG guidance manual. It is not a compulsory requirement, but it's more of a voluntary compliance requirement. Voluntary things I know are difficult to implement because you say, you procrastinate, I'll do it. But the cost to run by not adapting, taking early adoption is a lot more than waiting for the mandatory requirements because they're coming. And before you're going to find yourself having to invest more to comply. So we really want to see a lot of companies do that. I'm glad to say that I'm seeing close to 30 companies today at the stock exchange doing integrated reporting. Another close to 15 are doing sustainability reporting. And it's a good feel thing. You know, when you read those reports, you appreciate the companies and you know that my money is safe. And I think that's a very key part of it. So we want to really see an adoption of this. We want to see an acceleration of this. We want to see you go way and beyond, but also being able to put your reports out there to be rated. Because one of our long-term plans is to create a sustainability index. So companies that will qualify, that will have been rated, that will have good ratings, will qualify to be on the sustainability index. And that's important. I was arguing that today that seeing the share price of a company is the CEO's problem. It's not my problem. If your share price is performing, you should really be in trouble, not me. Right now I am. Because what happens, a shareholder in your organization is keen on seeing the share price perform, isn't it, at the end of the year? Equally, you, as an investor, or as a company, you want to avoid making provisions for losses out of low share price. Maybe you've invested in another organization, isn't it? So the total shareholders return is part of a CEO's KPI. And who influences shareholder returns? Things like investor relations, your sustainability practices, engagements with shareholders, corporate access. You know, investors want to just feel safe. They're with you. So you could be an institution that's not doing very well financially, but as long as you have all those tenets that mitigate risks, that support good business practices, this share price can hold. And I want to put a case that we're in the same boat. When the market is not performing, it's not the NSE alone, but it's also my listed company CEOs. All right? So we've got a problem that we need to deal with. I want you to all adopt the ESG guidelines. It has been mirrored on the GRI standards, and the GRI standards and the TCFD standards, and soon the scope 1 and 2 are related. All right? So if you're complying with those standards in advance, it becomes very easy when the scope 1 and 2 come into place, because they'll be mandatory. It's easy to adopt and to continue doing that. I want to see companies that the banks come and tap into the capital markets for green bonds. Okay? Because this is impact financing, I'm told, has close to $54 trillion in one way or another. We've got to find a way of tapping into that. We've got only one green bond in the market. But I think if you want to lend to these green opportunities, come and look for matching funding from the capital markets, both locally and internationally. So let's have more green bonds in the market. There's a very big space for that. Soon to be launched, carbon trading. I think this is going to be an area that of interest to you. How you're able to work with the organization and your supply chain to help advance trading of carbon credits in this country. And then finally, the importance of gender diversity and inclusion. This is a key part of our overall sustainability programs, and that's an area of great impact. I can tell you, organizations that have embraced gender diversity, allowing different groups, including the youth, into the organizations, are organizations of the future. We were discussing today with some few friends before breakfast that the character and behavior of the future customer is radically going to change. If you're not watching, you'll be like Kodak and soon become irrelevant. Because I was just telling them in my company, I introduced a mortgage scheme at the beginning of the year. I have zero uptake. Zero. So we are being asked yesterday whether we need it or not, because it's costing us money, you know? And why is that so? These fellows and ladies, sorry, these are very important people. They are very mobile, they're very discerning, their interests keep changing day and night, so you need to look for the right products for them. So investing in real estate might not be their interest. They might want to invest in REITs, which is liquid, isn't it? They want to invest in wealth management products, all right? Digital products, okay? I think this is what the future customer is going to look like. So embrace the youth in your business model, put them in your boards to really challenge you, you know, to totally disrupt your organizations. And that's how you're going to reposition these companies for the future. So in conclusion, first of all, is to congratulate Habil for staying for 7 years is not a short time. And to see that you've done very well, I think you deserve a very good applause for that. Happy to see Tamara and FSD continuing to partner with you. And just for the banks and all you participants, to see that the numbers have grown. I think the first level of entries we had were very few. But I think I've seen a high level of adoption, which is quite encouraging. So I really look forward to you being the sustainability champions for our country and working closely with the NSE in order to advance this great agenda for this country. Thank you very much.